What is up, guys? I'm back yet again with another one. Today, I'll be talking about the importance of higher time frames when it comes to analyzing your charts. So in front of me, we have the weekly time frame for Volatility 25. All right, guys. So in my opinion, the higher time frames are very important. All right, you should place emphasis on them so that you get an overall picture of where you are in the market. There's no point in trading on the lower time frames and sticking to them only, unless you're scalping and you really know what you're doing. The higher time frame is going to give you a bigger visual of what is going on and what you should be anticipating and looking for within the markets. All right. So from what I see here from a top-down perspective is this market right here from the inception of things. This is the weekly time frame, by the way, started buying from the level 2000. Okay, so let's mark that up really quick. Let's make this precise. Level 2000 is where this market began buying from. Okay, let's fix the line. Level 2000, let's lock it. Right. So from level 2000, the market started buying. And in which fashion was it buying? We need to ask ourselves these things. It was buying in an uptrend fashion. All right. So what are the characteristics of an uptrend? Guys, I always tell you an uptrend is characterized by higher highs, right? And higher lows. This is a high. This is a higher high. This is a higher high. This is a low, higher low, right? And higher low. This is an uptrend, right? So now our job is to see if we can pinpoint this on what's on our chart. And I'm telling you now, we can, right? So it's never going to present itself like art, but with practice, you will start knowing how to draw your market structure efficiently and properly. So like I said, we started buying from level 2000. Let's follow the price action. So we formed a high right here. Okay. The market formed a higher high, all right? A higher high in this region. This is all one high, guys. Do not be fooled by this forced breakout. It is all one high. The market was struggling to break this high for a period of time in which it ended up doing so, right? And it formed this high. Same thing here. This is a high that was formed. The market attempted to break the high again, of which it failed. And as per the characteristics of an uptrend, we also have our lows, right? So we have a low right here, a higher low, a higher low. This is all one low, right? And a higher low. As you can see, what we drew here is exactly what is presenting itself on the chart. But the thing is, people's eyes are not trained. So they are assuming that it's going to come to them like in the textbook, but it will never. All right. So this is an uptrend following what we call the Dow Theory. All right. The Dow Theory, D-O-W theory. The Dow Theory basically states that a market will continue trending until preceding structure is broken. So from our little illustration on the side here, until this structure here, this low is broken, let's say with a move like that, the market will continue trending up. So on our chart right here, let's clear the drawings. We don't want to get confused at all. Okay, clear all drawings. All right. Okay, so on our chart right here, this is the preceding structure that we are saying, if it breaks, then we will no longer be in an uptrend. And that is exactly what happened here. The structure was broken, and now the order block that is responsible for this structure break is this one. This move that impulsively broke this structure was originated from here, and that's where things changed. We were no longer in an uptrend. Instead, we entered a downtrend. This is a high, this is a lower high, this is a lower high, and we also have the lows. All right, this is a low, right? This is a lower low, this is a lower low, this is a lower low. So the market was in a downtrend over here. All right. Dow theory being respected. And as per the Dow theory, for as long as this high is not taken out, we will continue being in a downtrend, of which this high was taken out. And so we entered a mini uptrend, right? This was a high, right? Higher high. So high right here, higher high, higher high. Same thing, the lows start going up until this preceding low is broken here. Then we'll be in a downtrend again. So right now, as things stand, we're actually in a downtrend. Why? Because we have this high, right? And we have this lower high, right? And where is price heading to? It's important for us to know our destination. In my opinion, price is headed to level 2000. where I told you from the inception of things, price began buying from here. So I need you guys to understand one thing, guys. The market is cyclical in nature. All right. What do I mean by cyclical? It moves in circles. Okay. All right. This is a market in a nutshell. It keeps doing that forever. Okay. Reason being, there are people who bought here. The person who bought at level 2000 is rich right now. So they have to come back and liquidate him. They need to take the money from this guy. And also along this trend, best believe there are position traders who have been holding their trades for a very long time, for weeks on, and they're in buy moves. And where are their stop losses, guys? Their stop losses are below the lows, right? So these moves will have to always come and clear these guys. They have to liquidate. And when that liquidation process is done, they start moving the market up again. Hence the cyclical nature of the market. Okay, so that's why it's important for you to know your top-down analysis, nicely understand what is actually going on the higher time frames. So we said that we are looking for level 2000 as our destination, correct? Now we need to find out how the market is going to get there with the current data. And from what I can see is that the market moved impulsively. Okay, so let's draw impulsively, right? And then in a corrective way here, right? And then it entered an impulsive phase again here. Now I would say it's busy correcting. But where is it correcting to? I would say that it's correcting to this selling order block, where they will fetch more sellers, enough for them to be able to pump the market to the intended destination of level 2000, where we will be looking to take our buys for the long run. So now on the weekly time frame, we know that the market is consolidating, going to this selling order block. It's entering a corrective phase, going to this selling order block. So now we can actually scale down and look for trades. We can actually look for buys into our intended selling order block, right? And what I see right here is this daily buying order block, okay? And in my opinion, I say that the market has to come back a little bit, get more buyers, right? So that it goes back into our selling region, all right? It gets enough momentum to go into our selling region. So this is the power of top-down analysis. Now we go to the H4 and look, now the picture is getting clearer now, right? So on the H4, the market was definitely in a downtrend, and now it has entered a consolidating phase so that it can go up to our selling key point of interest on the weekly time frame, right? Can you see these things all pin in together, right? And this is our daily order block that we can nicely make precise, right? Right, so on the H4, we can nicely make this precise in the sense that we see that this is a buying order block and we really want a retracement in here, okay? The retracement in here so that we get enough buying momentum for us to push the market up, okay? And that is it. That is an analysis, guys. Now our job is to just wait. When market comes in here and it throws us our reversal patterns, of which I've talked about many of them on this channel, we take the market up. All right, a good entry in here will allow us to be in profits for a very long time, stress-free trading. But what has enabled us to be able to do that is the weekly time frame and a proper and sound analysis. All right, you need to be able to draw, or can I say paint a picture with regards to your chart. Like with this example, our picture started on level 2000. And we know that the market has been buying from level 2000 for weeks on weeks, right? And now it has come back there. It is almost there. So we are not just trading from nowhere. We have a plan. We know exactly what has to happen. And that's why you'll be in a position of an advantage, all right, to take advantage of the big moves that the market keeps presenting to us. All right. So as you can see, I think on my channel, you will never see an indicator because I don't believe in them. This stuff is self-explanatory, but it requires proper information and knowledge. All right. So anyways, I'm not taking much of your time today, guys. I just wanted to show you what I call the ultimate top-down analysis, basically how I analyze the chart. You know, nothing complicated as usual, just basics that we piece in together so that we can get the higher, we can get the bigger picture of things and make profit in the markets. All right. And mentorship program is obviously always going ahead. Many people inquiring. And remember, I told you have to schedule in advance. You know, message me, find out from me what we're doing there, and I'll see if I can schedule you in because my mentorship is one-on-one. I always reiterate, it's not just a process of learning from me, but it's also a process of unlearning the things that may have been keeping you behind in this market, okay? And then I also have my trade alert and setup group where I share setups like this on a daily basis so that one knows where to take their trades from. All right. So feel free to contact me if you're interested. And I really appreciate the support on the platform. And I will always be dropping more nuggets on how we should be conducting ourselves in these markets. Anyways, thanks, guys. Ciao.